Ever heard of Wealthsimple? Maybe you saw an ad boasting high-interest savings or commission-free stock trading. Sounds tempting, right? But before you dive in, a crucial question pops up. Is Wealthsimple actually a bank? This might surprise you, but the answer is no. Wealthsimple isn't a bank in the traditional sense. But that doesn't mean it can't be a valuable tool for your financial toolbox. Let's break down what Wealthsimple does and how it compares to a bank so you can decide if it fits your financial goals. Think beyond the brick-and-mortar branch. Think about your typical bank. Brick-and-mortar branches, tellers, maybe even a drive-through. They offer checking and savings accounts, handle loans, and keep your money safe. These are all great services, but the financial world is changing. Wealthsimple exists entirely online. It's a fintech company, which means it uses technology to deliver financial services. In Wealthsimple's case, the focus is on investing and managing your money. They offer features like investing, build a portfolio with stocks and ETFs, or choose from robo-advisor options that automate your investments. Savings, earn interest on your cash with their high-interest savings account, though, as we'll discuss, it's not technically a bank account. Trading, buy and sell stocks and ETFs commission-free, with some limitations. So, how does Wealthsimple keep your money safe? This is a key concern. Since Wealthsimple isn't a bank, your money isn't protected by the same deposit insurance programs. But here's the good news: Wealthsimple takes steps to mitigate risk. Partner banks. Wealthsimple partners with CDIC member institutions, think actual banks, to hold your cash. The Canada Deposit Insurance Corporation, CDIC, protects deposits up to a certain amount in case of a bank failure. Separate custody. Your investments, like stocks, are held by a separate custodian, typically a large, reputable institution. This means even if Wealthsimple runs into trouble, your investments are protected. The trade-off: convenience versus traditional security. Now, let's talk about the trade-off. Wealthsimple offers a user-friendly platform and potentially higher returns on your savings compared to a traditional bank account. However, you give up the peace of mind of full deposit insurance. Here's a quick comparison to help you decide. Feature: traditional bank Wealthsimple. Account type: checking, savings, not a bank ACCT. Deposit insurance: yes, up to CDIC limits, no. Investment options: limited stocks, ETFs, robo-advisor. Convenience: physical branches, online platform. Drive_spreadsheet. Export to sheets. The bottom line: Wealthsimple can be a powerful tool. Wealthsimple isn't a replacement for your bank, but it can be a valuable addition. It's perfect for growing your wealth through investing and potentially earning higher interest on your savings. However, if traditional security and deposit insurance are top priorities, a brick-and-mortar bank might be a better fit. Do your research, understand the risks and rewards, and choose the platform that best aligns with your financial goals. With that said, thanks for watching, and until next time.